Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Now, I didn't go quite as long today as I usually do because I usually cover a lot of different topics at once, but I wanted to go into one particular topic and show you a lot of more of the intricate details of how to use pace in your trading and in your market timing. For those of you that want to learn even more about these type of building blocks, such as pace, then I'd encourage you to check out my CD course at swingtrader.net. We had actually originally planned on increasing the price of that course earlier this year because we're re-recording it and just adding new examples and swapping out some of the old ones. But all of the data, all of the examples, all of the strategies within this course itself, it was created 2 years ago, but they're the exact same things that I use to this day. So the only difference between the newer one and the one that currently is displayed here is that I'm just going to be using newer trades to show you the same material. So if you'd like to pick up a copy at the current price before we increase it on the new one, I would encourage you to do so. This is only going to be available here for a very brief amount of time. I'm actually recording the newer version as well, and we will have an upgrade available for those of you that still would like to have the newer examples and newer trades included. So if you have a chance, take a look at that. There's a couple of examples of the material that is in there, and it goes through, a lot of the different building blocks that I use in developing strategies. There's also a market timing guide, which goes through my favorite strategies, and it shows you how to combine the building blocks. And there's another presentation that I recorded in Denver called No Indicators Necessary. It goes into one particular strategy, it's one of my favorite strategies, and how to trade without using additional indicators. So again, check that out at swingtrader.net. I'm going to go here and now take questions. Let me see if I can. It's kind of hard to read this little question box here. Let me see if I can make it a little bigger. Okay, so if anybody has any questions, I'd like to go ahead and encourage you to post that in the Q&A box. We have a couple of places where people are kind of posting. It looks like one is in general chat here. Okay, let's see. One question is, what if increased pace happens with no volume? There's a couple of ways that this can happen. The most common way that this happens is going to be at a high in a security. Let me see here. For instance, let's just use this one as an example. One time you see increased pace or increased momentum is when the market is exhausting itself at a high or at an upper resistance level. So you will see that sharper momentum increase, and all that's telling you basically is that the trend move is becoming more exhausted. A lot of times on a breakout, for instance, let's say it's a breakout higher, and you have kind of like a slower start to it, and then it begins to pick up. A lot of times the largest volume takes place once this breakout starts to confirm itself. So usually right about here or so, you will see a sharp increase in volume, confirming that breakout. But as it nears resistance levels, such as an equal move level, then that gives you an indication with that lighter volume that it's creating an exhaustion move, and it's more likely to start to reverse. In this case, volume alone is not something that I would look at, but when combined with larger resistance levels, it's going to help give you another example of a heads up for that reversal pattern. Okay, one question is, what are the symbols for trading these pair options? Let me go back here and show you that again. Again, you can find all of this information on ise.com. Oops, one too far again. And so you're looking at the Australian dollar, the USD AUD pair, and that symbol is AUX. If you're looking at the British pound, that's the US dollar, GBP, and that symbol is BPX. The Canadian dollar pair is CDD. The euro dollar pair is EUI. The dollar Swiss franc pair is SFC, and the dollar Japanese pair is YUK. Ellen asks, how do my strategies compare to Elliott wave theory? I've actually never studied Elliott wave. I know the basics of it simply from, just being immersed in this market for about 12 years now. Well, it's actually more than 12 years now. But I know that basic Elliott wave theory is that you have 3 waves of larger trend moves, and these are typically broken up with 2 waves of corrective moves. So when we're looking at 2-wave corrective patterns, 2-wave reversal patterns, and looking at trend development, then we're looking at the basic components of Elliott wave theory. And in that regard, there's a lot of similarities. But for those people that have studied both strategies, both how I approach trend development as well as Elliott wave theory, I guess there tend to be a lot of differences. One of the very important things that I don't see a lot of people ever emphasize with these types of trend development is that in order to get these 3 waves of upside where you do have that as the conclusion of the trend and not just continued upside following that, it's very important that each of these corrective moves is very comparable to each other in terms of how long they take to develop. For instance, if this particular 2-wave pullback takes 30 days to form, then that second 2-wave pullback also needs to take about 30 days to form, or else it doesn't have as high a probability of the fact that this 3rd wave is actually going to lead to a longer correction. And of course, momentum is a huge factor in terms of, well, does this end up being the 3rd and final move, or is there something that leads to, let's say you get, oops, where's my pen? Okay, here we go. 3 waves of upside, and it doesn't even create a higher high on that 3rd wave. It actually reverses. Or do you have the 3 waves of upside, and you get another correction and another move higher? But look, the trend channel is still in play because you have higher highs and higher lows. So technically, we still have an uptrend. Usually that will then create a larger reversal. But, it just depends upon how pace or momentum plays out within those upside moves as well to determine when those trend moves are actually going to come to a close. And I go into this in a lot more detail at that course at swingtrader.net.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.